Hey everyone, happy Wednesday. Welcome to another great live stream. My name is Joe, and we're going to be talking about, I'm really excited for this stream tonight. We're doing something a little bit different. So we are talking about how home insurance costs are really no longer a small problem or a small obstacle. They're becoming a huge, huge problem, both for home buyers and for home sellers. And home insurance, and also kind of what goes with that, property taxes, are creating problems, and they're upping the barrier to entry for home buyers specifically. So today in this stream, we are going to talk about how these huge increases in insurance costs, and sometimes insurance companies not even offering insurance, are affecting the housing market, home buyers, and home sellers as a whole. And then what I'm really excited for is we're doing something new this stream. We are going to be doing a new segment called the OPT segment. It stands for overpriced turkeys. And we're going to get into that a little bit more. No, it's not actually about poultry or turkey that's too expensive. We're talking real estate, and we're talking overpriced turkeys in the sense of what that means when it comes to real estate. We're going to take a look at a couple of examples. We have a couple of viewer submissions that we're going to take a look at for examples as well. And we're going to talk about maybe how to spot an overpriced turkey, and how you can avoid being in the position of having an overpriced turkey yourself. So without any further ado, we're going to get the first article up on the screen. Bingo. And this one comes from realtor.com. And first and foremost, before we get into this, obviously, we're going to be talking about homeowners insurance. And the reason that that's kind of an important topic is because, of all the natural disasters we've had. So hopefully everyone out there in Florida specifically is doing okay. Obviously, we have this insane hurricane that I think is like making landfall like right freaking now. And I believe between about today and tomorrow late in the day, it's going to get pretty dicey. It's going to get pretty crazy. So if you are watching in Florida, I hope you're safe. I hope you evacuated, and hopefully all of your family members and friends, everyone is safe. Your property goes unharmed, and hopefully we don't see too much injuries or deaths from that storm. It is, however, a pretty good example of what we're facing when it comes to trying to insure property. And this just happened to kind of coincide with the hurricane that we have coming up. I'm on the West Coast, so I don't know diddly about hurricanes. Now, if we're talking about fires, which is another huge reason, fires and hurricane/flooding are really the two big drivers of homeowners insurance premiums and their costs. So I know about fires, and I know about how to deal with fires. Hurricanes, I don't know the faintest thing about, and I'm okay with that. But again, if you're watching out there, if you're from Florida, if you're in a hurricane affected area, I hope everything goes okay for you. Hope you got out safe, and I hope you can ride out the storm wherever you are. So soaring insurance costs could force home prices to fall and some homeowners to forego coverage. So interesting. We're talking about how homeowner insurance could make it more difficult on home buyers. And this article kind of comes from the standpoint of it actually could lower the cost of homes, but lowering the cost of homes does not equate to more affordability, right? So just because the price of something is lower or cheaper or more or a lower amount does not make it more affordable. Affordability has to go also with income and the financial capability of the person whoever's purchasing the item or the commodity, right? So this came out back in April, so it's not super up to date, but with this stuff, the principle still applies, and we're still seeing a lot of this stuff happen today. When Palm Beach County Commissioner Greg Weiss learned his windstorm insurance was doubling to $20,000 a year, his insurance agent had an unexpected solution: pay off the mortgage on his West Palm Beach, Florida home and drop the insurance entirely. That's crazy that windstorm insurance alone is $20K a year. Now, of course, I understand, right? Like, it's Florida and it's West Palm Beach. This is in West Palm Beach. So I'm not familiar with Florida. I've never been to Florida. I'd like to go to Florida, but I'm going to pull up Florida on a map really quick. Oh yeah, this is like West Palm Beach. Okay, I'm going to share this really quick so that y'all can see this. So this is West Palm Beach right here. And this is obviously the ocean right here. So it's certainly on the coast. And it's like, oh yeah, it's like right on the East Coast, kind of towards the tip. I mean, this is like where like a lot of the hurricanes come through. And so I can understand that he's got expensive windstorm damage. But 20,000 a year is like insane. Oh, I stopped sharing my screen. Give me 1 second. There we go. $20,000 a year in just one insurance. It's not even homeowners insurance. That's windstorm insurance. That's crazy. So his insurance agent just said, just pay off the house and then cancel the insurance. And that's one thing that people forget. And actually, I just made a YouTube video on this. It's going to be launching under my new channel here in the next month or two. But a lot of people think, oh, you know what? I'll just not get insurance. I'll just not get homeowners insurance, right? It's not a requirement by law. And if I don't want insurance on my asset, then I won't get insurance. So I'll just save the 20K, won't get insurance, right? Well, no, there's a problem with that. If you have a mortgage, if you have a loan, your mortgage holder, your lender, the bank is going to require that you maintain home insurance coverage. And that's going to vary throughout different parts of the United States. So like in Florida, obviously this wind insurance is a requirement of the loan. And that's why Mr. Weiss's insurance agent said, you got to pay off your house first, and then you can cancel the insurance. So if you have a mortgage, you can't just skip on the insurance and you think, oh, well, they're not going to know. They will know. They absolutely will know. And if you don't get insurance, they will give you insurance and then they will send you the bill for that insurance. And you won't get to pick what coverage you get. You won't get to pick what company it's with. And you won't get a say in what the premium is or what the deductible is. They're just going to give it to you because after all, the bank has to protect their asset. And yes, it's your home and you own it, but the bank has a financial stake in that asset for really the next 30 years. I mean, unless you're on a 15-year note or a 10-year note or something like that, or you pay off your home early. But for the large majority of people, for the next 30 years, the bank is going to need to make sure that their financial stake in your home doesn't bust because you decided not to get home insurance. So I'm sorry out there, you can't just forget the homeowner's insurance. Now, where it does come into play where you could get rid of the insurance is if you do own the home free and clear. So if the home is paid off and you don't owe anybody money and it's your home and you own it outright, there's no loan, you could go without your homeowner's insurance. But then again, now your home, most likely for 99% of people, it's your largest asset, right? It's where pretty much all of your nest egg is in your home and in your property and your real estate. And if something were to happen and your house caught fire, there was a hurricane, a tornado, there was some major flood, there was a hailstorm that pummeled your roof, broke all your windows, God knows what could happen, then you're gonna have to come out of pocket for all of those repairs. And hopefully you've got enough in the bank to fix the house in the way that you need it to be fixed. So yes, you can skip the insurance if you don't have a loan, but then you are you're risking it. That's a very risky proposition. So 2 years ago, Mr. Weiss did just that. He figured his century-old home had survived numerous hurricanes. The money he saved on the insurance was used instead for a new roof. He also installed impact windows in the three-bedroom home, which is located about a mile from the shore. So he said, okay, fine, forget it. I'm not doing your $20,000 a year wind insurance. So you know what I'm going to do is I'm going to do some improvements to the house. I'm going to put a new roof on that hopefully will withstand, any hurricane or wind damage. I'm going to put on some impact resistant windows. So if there's debris or hail, windows don't bust out, cause further problems. So at least he kind of reallocated the money in a smart, appropriate way. But still, that would make me super nervous. And we all know the storms of today are not like the storms of the past. And the climate change that we've experienced and, whatever you're feeling on that is neither here nor there. The climate is changing. Now, what's driving that change? Y'all can debate that in the comments if you want, but there's no mystery that we're getting different type of climate events, weather events, and they're becoming more severe. And to have this guy on the coast of Florida, on the east coast of Florida, where we saw on the map, just to not have insurance, that is gambling. It felt terrible, but it just didn't make sense anymore, says Weiss, who is also a former mayor. When you look at the cost benefit analysis, I couldn't justify the cost of the insurance anymore. He continues to pay his regular insurance policy. So that's good. So he still has his regular homeowners insurance, but the special wind coverage, wind storm coverage, which is probably mostly related towards hurricanes, he's not paying for anymore. And I wonder how he feels now. I mean, obviously he's on the East Coast. This is a West Coast storm that Florida's going to get hit with, but yikes, I wonder how he's feeling right now. Hopefully his home's okay. In the past few years, insurance companies have begun increasing homeowners' premiums, dropping longtime customers, and exiting risky parts of the country entirely as climate risks and their potential losses grow due to disasters like flooding, wildfires, and hurricanes. This has forced homeowners such as Weiss to make tough choices, such as accepting the risks if they drop their insurance coverage, paying higher premiums, or moving to lower cost areas. Most homeowners with a mortgage are required to have insurance, which they can drop once their loans are paid off. And just because you can drop it doesn't necessarily mean that you should drop it. High insurance premiums are already affecting the housing markets of the most affected areas, which continue to attract new residents, often due to their natural beauty. So makes sense, right? Like people are attracted to Florida because of the beautiful coastline, the beaches, the shore, the sort of, if you get down into the Keys, you kind of have this Caribbean type water and stuff. But that also means that it's susceptible to storms, flooding, rain, hurricanes, things like that. Same goes for California and the West Coast, right? Beautiful mountain regions, beautiful forests, beautiful huge trees, great areas to relax, hike, ski, snowboard, mountain bike, all of these beautiful things. Well, it's susceptible to wildfires and big ones that move very quickly. So that makes sense that, people are attracted to places that are beautiful, but unfortunately, usually those beautiful places have some risks that come along with it. Homes might sit on the market for longer, prices are being forced down, and deals are falling apart. And it's expected to only get worse as communities continue to grapple with increasing climate risks and insurance premiums. These forces are likely to contribute to where people live and what happens to the communities they leave behind. Almost half of the homes in the county are at risk of severe or extreme damage from environmental threats, affecting nearly $22 trillion in real estate, according to the recent Realtor.com report. I'm sorry, I misspoke. Almost half the homes in the country are at risk of severe or extreme damage from environmental threats. Yikes. That's a lot. It makes it much more expensive to live here than it was just a few years ago, says Weiss. It causes a lot of stress. And so you think to yourself, like, okay, well, how much can it increase? Well, if these home insurance premiums are going up, $200 a year, $300 a year, over the course of 5 years, that's a significant increase. I mean, we're talking, over $1,000, a couple $1,000 in just a few years that these homeowners insurance premiums have risen. And that's going to increase your monthly cost, because as those premiums go up, your mortgage is going to go up, because typically most people pay the principal, the interest, property tax, and homeowners insurance, and HOA if it applies, and that makes up their mortgage. So those 4/5 things make up their mortgage. Every once in a while, you have people that just say, no, I'm going to pay the principal and the interest as my mortgage, and then I personally am going to pay my insurance, and I personally will pay my property taxes. Most people don't do that. They impound their taxes and insurance, which means you just make one payment directly to your mortgage holder, and then they basically are the middleman, and they pay the insurance company and they pay the property taxes. Makes it easier for homeowners, and it's just personal preference on what you want to do. So when insurance premiums go up, that monthly mortgage bill that you get could certainly go up. Last month, State Farm said it would discontinue offering coverage for 72,000 houses and apartments in the wildfire-prone state of California beginning in the summer. This comes less than a year after it stopped issuing new home insurance policies in the state. And this is something that I've had experience with it, not personally, but my clients, where, they're buying a home, and one of the first things you do when you get a home is you got to set up insurance. And this is what that's one thing you do in escrow. It's not even after the home's been bought. It's before you've closed on the home. You have to have proof of insurance to satisfy one of the conditions of getting that mortgage, getting that loan. And there were some people that, honestly, they had a really, really hard time just getting insurance on their home. And State Farm said, nope, sorry, we're not giving insurance. Farmers, nope, we're not giving insurance. Geico, nope, we're not giving insurance. You're like, okay, well, if I can't get insurance, I can't buy the house. And then how does that affect the market, right? Luckily, there are still a few companies. AAA is still pretty good about writing policies, but these insurance companies, they're taking a beating. They're when there's a big natural storm or a natural disaster, or this environmental caused problems, they have to spend a lot of money to fix everyone's home. I mean, if one home gets flooded, how many tens of thousands, if not hundreds of thousands of dollars is that, depending on the flood? Okay, well, now imagine if an entire neighborhood flooded. Millions, billions, trillions of dollars could be at stake, right? So the more they pay out in insurance claims, the more they have to take in insurance premiums. And at the end of the day, an insurance company it's a business, and they're going to be looking for the best return on investment. They're going to be looking for the best opportunity. And some of these areas, like the high risk areas in California, Florida, just don't make sense to them. So they say, we're just not going to offer coverage there, which goes into a whole other problem of how do people get coverage? And then is there like state or federal coverage? And it's a whole freaking thing. And by the way, guys, as we're talking about insurance and coverage, if you guys have any questions, please pop them into the comments. I'd love to hear from you guys. Let me know what you think. Have your guys' insurance premiums changed? Have you opened up that monthly mortgage statement and seen, oh my gosh, my monthly bill went up $37 because insurance went up? Have you had issues getting insurance or renewing your homeowner's insurance? Let me know in the comments if you've had any experience with that. Last month, we'd already talked about that. The news follows Farmers Insurance announcing last summer that it wouldn't be offering any home, auto, or umbrella policies in the state of Florida. This affected about 100,000 customers. Farmers just straight up walked away from 100,000 people, and not even just property insurance, but property, auto, and umbrella. For those who don't know, umbrella insurance is what's used a lot in business. So like if you're a hairdresser or you have your own small business, or you operate a batting cage or a law firm, you have an umbrella coverage, which just says if anybody tries to sue you, the umbrella coverage is like just general liability coverage for running a business. So they said, we're not even doing that anymore. So Farmers just said, adios to Florida and 100,000 paying customers. That's crazy to me. That just shows you how Farmers has run the calculations. They're like, 100,000 customers isn't even worth it to us. That's how crazy it's getting for some of these high risk areas like California and Florida. Yep, that's a California wildfire. Seen that a few times. In fact, unfortunately, in the most recent wildfires that we've had in my area, just in the foothills up behind me, right behind this camera, if I had it flipped around and you just had X-ray vision, could go through all the walls and the trees, the foothills are probably about a quarter of a mile away from me. And then you hit those foothills and it's just mountainous until you get on the side and it's open desert. So this image right here is something that I've seen from my street. I saw from my parents' street when I was a kid growing up. Luckily, I never lived actually in the hills, so I never had a direct effect, but schools were closed. We couldn't go outside for a couple of days, ash coming down, the sky was orange for weeks. It's really scary stuff. And if you have a home like this in this photo and you're affected, it's a huge problem. And it's going to cost a lot of money. If these homeowners can't find other insurance plans, they'll be forced to move on to the state plans of last resort that cover the customers that private insurers find too risky. This can often be expensive, and homeowners might have to pick up additional plans to cover any gaps, especially if their mortgage lenders require the extra coverage. Some will go without insurance. And we have something like that in California. So in our hillsides, again, right behind me, which I just described, if you have a cabin or a home in the foothill communities in my area, you can't get traditional insurance. None of the companies will give you traditional insurance. So what do you have to do? Well, like this says, you have to move on to a state plan. So we have the California Fair Plan, which is kind of like a state-run insurance. It's very expensive. It will cover you, but it's not like super extensive coverage. But it's expensive. It can cost $5,000-$6,000 a year just for a really basic home in a high risk area. I have a really generic home, a 50s home, just on a normal street in a normal suburb. I think I pay probably about, I don't know, $1,900 a year, $2,000 a year for homeowners insurance, and then about another 700 or 800 for earthquake insurance. But if you have a small cabin up in the hills in the wilderness area in Mount Baldy, which is the mountain community that's closest to me, Mount Baldy is a great town, by the way. Then you have to go to the California Fair Plan. And unfortunately, one of my clients, I sold a cabin up in Mount Baldy, and they just had some terrible fires up there within the last month and a half, 2 months, and he lost the cabin. It burned down. Fortunately, it was a recreational cabin for him, so it wasn't his home, but the cabin right next door to him, it was a family's full-time home, and they lost their home, and that cabin has been in the home since the 40s, and it's now gone. It's really heartbreaking. It's really, really sad. And you know, when you think of it in terms like that, it's like, who even gives a hoot about the insurance? Like, my home's gone, and the memories are gone, and where my kids sleep, it's gone. All that stuff's gone, and very, very quickly. So it's just tough. You know, the areas in California, the fire areas in California, just like the hurricane areas in Florida, it's a really real threat. What do you have for me, Michelle? I haven't had insurance issues, but I have a client who lives in Florida who says it's nearly impossible to get home insurance. Only reason he has is because it's bundled with other investments. Yeah, that client who you have in Florida is probably very, very glad that they were able to get a bundled coverage, because yikes, their home is probably in a little bit of danger right now, unless they're in the really, really northern part of Florida. But yikes, yeah, at least they have coverage. That's good. I can't imagine how an everyday person manages to get insurance in Florida. Yeah, exactly. I don't know what you do. I'm sure the state of Florida has some type of state-sponsored insurance. In fact, if I have any Floridians in the chat, if you could let me know if you're aware, like, does Florida offer some type of state sponsored or subsidized or something? Like, what happens if you just can't get any insurance? Like, there has to be an avenue. So if anybody in Florida or is familiar with Florida and knows the answer to that, I'd really like to know. All right, let's continue on. About 12% of homeowners did not purchase homeowners insurance, according to a 2023 report from the Insurance Information Institute and Munich Reinsurance America. So 12% of homeowners out there are rolling the dice, and they are getting a little risky with it. And they're saying, screw it, I'm not doing homeowners insurance. So good luck to those people. Hopefully it doesn't bite them in the tushy. The biggest challenge is lots of people have made decisions based on where to live and what properties to buy based on existing insurance policies. Says Benjamin Collier, a risk management and insurance professor at Temple University in Philadelphia. When you change the costs, people get hurt. And I'm glad it's got brought up, because it's one of the things I cover in my latest YouTube video that's not out on this channel yet. Like I said, we're going to be launching a new channel here in the next month or two. And one of the things I talk about is people, when you're looking at a home, you have to see what the current insurance rates are for that home, like right now. Like, you can't go off of previous or historical or averages, because it could vary, and it can vary by just a couple blocks, right? Like, if, for instance, my home, no problem with insurance. But if I literally had a home on the other side, we have a highway, we have a freeway that's about a quarter mile away. On the other side of that, if you own a home, you're now in a canyon, good luck getting insurance, or it's going to be significantly more expensive. So just because we share the same zip code, or they share the same city, or we're only a mile apart or a half mile apart, doesn't matter. So if you are thinking about purchasing a home, investment property, whatever the case may be, you need to get updated insurance quotes like today, right now. And it's very easy. You can even do it online, call up your insurance provider, just give them the address and say, hey, I just need a really rough quote for a property at this address. And that's something that you should do either before you buy the home or as soon as you get into escrow. You should check on that, because it can make a big difference. Because imagine if you have to pay $2,000 a year versus $10,000 a year. It's going to make a big difference in the affordability of that home to you. Nationally, insurance premiums rose 11.3% in 2023 and shot up 33.8% from 2018 to 2023, according to S&P Global Market Intelligence. This is insane. And this is what I mean. Like, this is why you have to be really diligent in looking up these home insurance costs, because just in 2023, it went up 11%. And in 5 years, It went up almost 34%. That's outrageous. And a lot of it has to do with increased weather activity and severe weather activity. And also a lot of it has to do with inflation. As things get more expensive, lumber gets more expensive, labor gets more expensive, materials get more expensive, everything gets more expensive, land gets more expensive, everything's more expensive. Well, then the insurance premiums have to go up to cover those expenses, right? As more money goes out, they need to bring more money in. In certain regions, the surge in insurance costs has been staggering, nearly tripling within a span of just a few years, says Jenny Lenz, managing director of Dolly Lenz Real Estate. This sharp rise is placing immense strain on the budgets of homebuyers, with some even being forced to withdraw entirely due to insurance premiums becoming simply unmanageable or unattainable. Man, tripling in 3 years. That's just so much. How much could home prices be affected by higher insurance premiums? Estimates vary on how much home prices could be affected by climate risk and higher insurance costs. If home insurance premiums were expected to rise 20% annually for the next 20 years, home prices could fall as much as 10%, according to a recent report from S&P Global Market Intelligence. Now, again, this is just a projection. This is a pretty lofty projection, but you think, hey, this may not be a bad thing after all. Like if there's a 20% rise in premiums, at least homes are going to fall 10%. Well, again, it doesn't matter. You're still paying the same amount per month. You're just paying it in a different way, right? Like, 80%, 80 plus 20 is still 100. 70 plus 30 is still 100. 50 plus 50 is still 100. So, just because one value goes down and the other value goes up, you're basically net in the same exact spot. If premiums go up by $100, home values go down by $4,100 for homes not exposed to sea level rise and by $25,000 for homes that are exposed to sea level rise, says G. She was one of the, I skipped a paragraph. Homes at risk of flooding could face even deeper price reductions. For every $1 increase in someone's flood insurance premium, their home value falls by $41, says Sean G., a finance professor at New York University. In areas with high sea level risk, that $1 increase translates into a $250 home value decline. Home price appreciation also falls. So now we're starting to see in these, areas that are prone to sea level rise and shoreline loss. Again, California, Florida, the big ones there. You're going to see a noticeable decrease. Now, it's also important to realize if you have a home on a waterfront, whether it's in California or Florida, it's probably a really, really expensive home, multiple millions of dollars, most likely. So if you have, if your insurance premium goes up by $100 and your value goes down by $4,100, not going to make much of a difference. But not all the homes are multi-million-dollar homes, right? There's going to be some normal ones in there too. So interesting, that's an interesting analysis and a very interesting study. Many people are beginning to take the threat of a 100-year storm more seriously as an insurance premiums rise, says G. Just a few years ago, the threat of a natural disaster striking their property might have seemed improbable or a problem for the distant future, but high insurance costs that better measure their risks are hitting their budgets today. The higher insurance costs haven't pushed home prices down by too much yet. With so few homes available on the market, buyers and investors are keeping prices high, even for homes in risky areas. However, experts believe it's only a matter of time before that changes. In some areas, homes that are legitimately legitimately in a high-risk area, they begin to sit on the market longer. Ultimately, you begin to see discounting, says Jesse Keenan, a sustainable real estate and urban planning professor at Tulane University in New Orleans. The discounts are just due to higher insurance premiums. Homebuyers are also weighing the likelihood of future damages. And that kind of sums it up right there. So you think like, okay, well, how could insurance and weather events affect home buying? If you have a home that's in a high flood or high fire or high hurricane area, people might go, you know what? That's not the area for me, right? And in my area where we have a portion of my city, and for those that don't know, I'm in Claremont, California, which is a suburb of Los Angeles. It's about 40 miles east of downtown LA, right on the border of Los Angeles County and San Bernardino County, which is home to the Inland Empire. And in my city, we're a foothill community. So we back right up to the foothills, which is why if you turn the camera around and walk through my wall and walked a quarter of a mile, you would be basically in the hills, in the mountains, kind of. So there are some homes in my city that in the north portion, it's very difficult to get insurance, or they're at risk of having problems getting insurance. And people could certainly say, you know what, I'm not going to buy that house, but I still want to live in Claremont. I'm going to buy a different house in Claremont. And then the person that has that home that's in the high fire area could have a difficult time selling that home and may need to incentivize people to buy the home by cutting the price. So we're seeing directly how, these home insurance rates and premiums can really affect the desirability and therefore the value of a property. Already, some home buyers are having trouble qualifying for mortgages or backing out of deals due to higher insurance costs, says Joe Uzi, president of the mortgage division of Gulf Coast Bank and Trust. It has 20 branches in Louisiana, a state that has been ravaged by hurricanes. About 30 to 40% of the deals he sees in his state fall apart after someone who is under contract to purchase a home gets insurance quotes. That's a staggering number. 30 to 40% of deals falling out after they're already in escrow, but then they get that insurance quote and they go, this is really expensive. I'm not going for that. They may say the insurance premium is making this payment unaffordable, says Uzi. It could certainly hinder a seller's ability to sell a house. About 90% of Florida investors missed out on at least one deal because of insurance issues, says Rick Sharga, CEO of CJ Patrick Co., a real estate and mortgage intelligence firm. They couldn't get insurance. They couldn't afford for the property they wanted. He's personally experienced some troubles with rising insurance premium. His insurer canceled the policy on his Orange County, California home due to wildfire risk, which is crazy because Orange County isn't even thought of as a county that has high fire risk. Let's go back to the map for those that don't know where Orange County is. All right. Share this instead. So Orange County is home to Disneyland. Here's beautiful Disneyland. Here is Orange County. It's right on the coast, tons of coastline, some of the most beautiful beaches in all of California. My favorite being Laguna Beach. It's like being in Hawaii. It's beautiful. This whole area outlined in red, this is Orange County. And, it's funny because you think, how could a county that has a huge amount of coastline that backs up to an ocean, how could that have high fire risk? I want to open this in maps because I want to get satellite view, because you will see that this portion right here. This portion right here is a lot of foothill and wilderness. And this area can be prone to wildfire. Now, it's not going to jump much past the 241, this big road right here, but still, insurance companies have run the analysis. They've done the risk assessment. And some of these homes that are, kind of backed up in this area, Coto de Caza is a very expensive, very exclusive community. They could have some issues. All of these areas, Anaheim Hills, Trabuco Canyon, Lake Forest, some of these places, North Tustin, that kind of back this area could have some real problems. So it's kind of interesting that even a county on the coast is experiencing issues with homeowners insurance. And just because I have the map up here, there's Claremont. That's me. So I live in Claremont. And as you can see, so this is the 210 freeway. This is the highway that is not too far from me. And I kind of live in this upper area here of Claremont. And all of this up here is all mountain. There's cabins, Mount Baldy, skiing, snowboarding. All of this is hugely ripe for wildfires. And it burns all the way down in here, and it runs all along these foothill communities and even parts of Claremont. There's one part of Claremont called Claraboya right here. You see this development. Some of these homes have burned down. They've been lost because these hills back here catch on fire. So it's really scary. And luckily, again, I live far enough down here in the city where I don't really have to worry about that, but a lot of people do. And it's a significant issue. So let's finish up this article. This pushed him into the state's FAIR Plan, which what I was talking about a little bit earlier in the stream. In case you missed it, the California FAIR Plan is a state-sponsored insurance that at least gives you fire insurance coverage, and then you can supplement that with other types of homeowners insurance. He's paying twice as much as he was just 2 years ago. Now, we don't know what twice as much is, but we do know that twice as much is doubling, and that's a lot. Even if it's from 2,000 to 4,000, heaven forbid it's 4,000 to 8,000, he's paying a lot. Experts say that eventually only the very wealthy and investors may be able to afford homes along the storm-prone coast and wildfire-prone parts of the West. Everyone else, including retirees on fixed incomes, might move to nearby inland or safer counties if they can afford to do so. This is a really important two sentences because obviously we all know that it's a real pain and it's a burden when our monthly living costs go up, in the event that your home insurance premium goes up. But if we're working or we're financially stable, okay, we can absorb it to an extent. But if you're in a fixed income, if you're retired and you've been paying roughly the same homeowner's insurance premium for 15 years, 10 years, 20 years, and then all of a sudden you get a letter in the mail that says you no longer have insurance, or if you want to have insurance and renew it, it's going to go up 75% or 100%. If you're on a fixed income, what do you do? I mean, that you only have so much money. And that means you're going to have to cut back on something else. You're going to have to go without insurance, or you're going to have to move. And that's a problem. So it really affects the older and low income people the most. Lower income and middle income people will find it increasingly challenging to live in these areas, says Dave Jones, the director of the Climate Risk Initiative at the Center for Law, Energy and Environment at the University of California, Berkeley School of Law. He is also the former insurance commissioner of the state of California. Some wealthier people and investors will move in behind those who are moving out. Many of the people moving to flood zones along the nation's scenic coastlines are indeed wealthier individuals, says Parinithya Sastry, a finance professor of Columbia University in New York. If people want to rebuild and retain their communities, I'm for that, she says. However, people who can't afford to bear the disaster losses shouldn't be in those areas. It's going to wipe them out. This further increasing the divide from the haves and the have-nots. Like, not only are those homes already expensive because they're beautiful and they're in these amazing areas, but they're getting so expensive to insure or uninsurable that you're going to have to be mega rich to even afford to buy the property and then to rebuild the property or continue to live there and pay for the insurance, further pricing out people that can't afford to do that. So insurance premiums are often artificially low. I'm going to summarize this because it's interesting, but it's not crucial. Basically, insurance companies have to look at an average of all the properties that they insure, and they find that average, and usually it's weighted on the high side. So if you have a high risk property, you're actually paying a little bit less than you should be, although it's still a lot of money. And if you have a low risk property, you're actually paying more than you should be. So homeowner insurance premiums kind of are they're often artificially low for the riskiest homes. So they're lowering that risk, and the other ones are kind of making up for that. There's one other article that I want to show you, but it's going to be really, really quick because there's just some graphics, and we've already kind of gone over this topic in depth. We're going on 40 minutes, and I want to get to our overpriced turkey segment. Climate change is making home insurance costs more expensive. These maps show prices and weather risks in your state. Let me scroll on down. How much does the average person spend on home insurance? So here we have it. We have a nice graphic here. The darker the green, the more expensive. The lighter the green, the less expensive. So the states leading the way. Where's Dave Matney in Omaha? Is Dave in the chat tonight? He's usually here, but maybe he's not. Our buddy Dave, he's a Nebraska guy, leading the way with $5,600 on average, $471 per month. And then of course you have Florida, $5,531, $461 a month. So actually Nebraska is slightly more pricey with a homeowner's insurance. And actually Georgia's not too bad. California also not crazy, an average of $1,456. But again, keep in mind, there's a lot of homes in California that are much lower risk. They're much lower risk homes. They're not in the foothills. They're not in the mountain areas. And that brings it down quite a bit. Maddie, what's going on, Maddie? What about all the FOMOs from the last few years, particularly those that waived inspections and now have repairs and much higher insurance? Their salaries may not have increased enough to cover. Yeah, that's a good point, Maddie. Thanks for the comment and thanks for hanging out. And also thanks for contributing to the stream. We're going to be taking a look at your OPTs shortly. That's a really, really good point. People that waived inspections and maybe don't know how their home performs in a flood or heavy rain. Maybe they don't realize that they have drainage issues. Maybe they have a home on the coast of Florida and they don't realize that they have drainage issues. And they think, oh, okay, well, if I get a storm, we'll ride it out or whatever. If it's really bad, it's really bad. But maybe even a small storm can affect them in a very negative way, and they can experience flooding and things like that. Most people, even if they participated in the FOMO and even if they waived inspections or things like that, they're still going to have that insurance in place before they close escrow. So they should have an idea of what that insurance is, regardless of when or how they bought. But that doesn't negate the fact that if those insurance premiums went up and they went up significantly, they could have trouble paying for them. And this is why these insurance premiums could really affect the housing market, because we could see people, especially those, like I said earlier, that are on fixed income, like you mentioned, Maddie, that maybe their salaries haven't increased and haven't kept up pace. And now all of a sudden, these people are on the hook for an extra few $1,000s a year, or a couple extra $100 a month. And that could be the difference between them affording the home and not affording the home. Yeah, it could certainly come into play. Thanks for your comment, Maddie. I appreciate that. There's one other graphic in here. Yes. So counties most at risk from natural hazards and climate change. I don't think this is going to come as a surprise to anyone. The blue areas are very low risk. The red areas are very high risk. So sure enough, you have a lot of Florida, both coasts of Florida, really high, Hillsborough, Florida, Miami-Dade, Broward, Palm Beach, anything on the east and west coast of Florida gets hit. Anything along the Gulf, this is again where hurricanes come ripping through, and the eastern coast. I mean, this is the hurricane area, and this is the wildfire area. So it kind of makes sense, right? You're going to see these are all my counties right here. Let me see if I can make this a little bit bigger. Zoom in. Yeah, we can. Cool. This is Orange. This is San Bernardino. And this is Los Angeles. I live right here, right on the border, very close to Orange, very close to San Bernardino, very close to Riverside. Keep in mind that the reason that a lot of these areas are red is because all of this is mostly desert, and a lot of it's also hills and mountainous. So those counties get tagged, but not all the homes are super high risk there. So kind of interesting. Hey, Innovative, how you doing? Thanks for hanging out on the stream tonight. That's my parents' situation in Dallas: increased taxes, increased insurance, fixed income, retired. Yeah, and unfortunately, Innovative, like this is becoming super common. And the double whammy with Texas is they get increased taxes, especially if you're in one of these areas. I don't know exactly, is Dallas one of these? I think Dallas is up here. So, you're in a pretty high area. I'm not sure why that is. It's so interesting. It must be just because due to population density or something, because everything else around it's fairly low. But Texas, you get a double whammy. You get higher insurance, and Texas has very unfavorable property tax laws. And their property taxes can be like reassessed at will by the county. They can go up at any time. There's no cap on it. The people of Texas, the good people of Texas, need to start voting in some legislation and get some politicians on board to cap some property taxes and make it a little bit easier, especially on older people, which is why I love California for that reason. And I'm sure there's people that want to fight me in the comments that I love California for a reason. But one thing that we have here in California is called Prop 13. It was voted in the mid 70s. It said that property tax can't go up more than 2% per year, and the assessed value can't go up more than 1% per year, which is a huge, huge benefit to people on fixed income, older people. It basically means that your property taxes are only going to scooch up just a little bit per year, and you're never going to have just this crazy reassessment, because properties can only be reassessed upon sale, not at any random time. So yeah, unfortunately, Innovative, it's a common thing. Hey, Cynthia, hope you're doing well. And Henry, I'm sure you're both watching. Thanks for hanging out. And I think, oh yes, and there was this graphic too. This is a really great graphic. Can I close this? Get this out of here. This is a great graphic. This is U.S. 2024 $1 billion weather and climate disasters. So this just shows you in 2024 all the crazy stuff that was going down. And some of this stuff, when did this article come out? Because it doesn't have the California fires in there. Oh, September 17th. Actually, this was like right when the California fires were breaking out. So I'll show you where those are on this map. So, we have Central and southern tornado outbreak, central, southern, and eastern severe weather, a tornado, central, southern, and northeastern winter storms, Texas hailstorm. And then here we had like a ton of fires that just didn't get, they didn't make this graphic by the time it got published. So lots of major events that were, billion-dollar weather and climate disasters. So crazy stuff. So now we're gonna have some fun. We're gonna do a new segment. I'm glad Maddie's here because she contributed this. So this next segment, this is the first time we've done this on the stream, and I want to know your guys' feedback. So let me know if you guys like this. Let me know if you guys find this interesting or fun. And while I have you guys, again, if you have comments at any time, pop them into the chat. Love to hear from you guys. I always love hearing from you guys. I love to know your thoughts. If you like the stream, please go ahead, hit that thumbs up button down below. Like the stream, helps me out, does me some favors. And if you haven't subscribed and you're watching, it would be really, really great if you could subscribe to the channel. It's free, doesn't cost anything, and it really helps me out. So we are going to talk about OPTs, overpriced turkeys. And no, we're not talking about poultry. We're not talking about a sandwich. We're talking about real estate. And so an OPT is a slang term in real estate. Again, it stands for overpriced turkey. It means a property that is like buku overpriced, like stupidly overpriced. Like, why would you ever do that? And usually it's properties that are priced too high and they're not in very good condition. Every once in a while, we see overpriced turkeys. An overpriced turkey is not the same as just an overpriced listing. An overpriced turkey is like 10, 15, 20% over market value that just sits on the market, and then it gets labeled with overpriced turkey. So let's go. We are going to start with one from my town so I can kind of explain it a little bit. I'm going to explain what an OPT is, how to spot one, and how you can avoid becoming one yourself. And then we have 2 OPT submissions from Ms. Maddie B in the chat, and we're going to go over those as well. So the very first one I'm going to pull up is this. It's actually a beautiful property. And this is from Zillow. This is my hometown in Claremont. Actually, not my hometown. Laverne's my hometown. Claremont's where I live now. And this one is at 720 North Indian Hill Boulevard. This is in a very coveted area of Claremont. This is in the Village, which is a small kind of boutique neighborhood full of architecturally designed homes, a lot of vintage homes. Most homes built between about 1910 and 1950 for the most part. Lots of craftsmen, Spanish revivals, French Tudor, mid-century modern, bungalows, things from 800 square feet all the way up to 3,000 square feet. Lots from 6,000 square feet all the way up to half an acre. It's a very cool, eclectic neighborhood. It's the most coveted and sought after neighborhood in Claremont. And it's probably the most coveted and sought after neighborhood, well, in a couple city radius, but I don't want to show bias to this. So this is the house. First we're going to do is we're going to take the first thing we're going to do is we're going to look at the photos, right? So it's at $1,745,000. According to Zillow, it's been on the market for 73 days, but that's a misnomer. We're going to go down here and we're going to go to, where's the tax history? Here we go. So the listing was first put on the property. I'm sorry, the property was first put up for sale back on February 26th. It was listed for sale for $1,988,000. And when I saw this come up, I thought to myself, these people, they're drunk. These people are drunk. This is so high. At that time, and I'm going to show you a comparable property. I'm going to show you the property that I would compare it to get the pricing. At this juncture, this house was easily $350,000 overpriced, probably closer to $400,000 or $450,000. Crazy overpriced. And sure enough, it sat, and about a month later, they did a price cut to $188,000. And then the listing was removed on 6/3. So it just sat for 3 months from March 20th to June 3rd. It just sat at $1,088,000. My friends, that's the definition of an overpriced turkey. And this is not a bad house. It's a good house. It's just way too expensive. So they relisted with a different firm at $1,790,000. So a little bit better. But that didn't do the trick. And just about 2 months later, they dropped it to where it is now, $1,745,000. And here we are on October 9th, and the property is still available. So this is a bona fide OPT. So let's take a look at the photos and think to yourself, okay, well, why isn't it selling? Like, do the photos suck? Is there an extraneous circumstance? Like what's going on? And it's important to realize that when we're talking about overpriced turkeys and overpriced homes, not every home that hasn't sold is an OPT. Not every home that's overpriced is an OPT. There's kind of like a certain mixture of criteria that goes into it. So let's say there's a home on the market and it's not overpriced, but it's been on the market for 100 days. But as you research the property, you realize, oh, hey, you know what? There's tenants living in the property. No one can see the inside of the property because the tenants are making it difficult. You have to make an offer subject to the inspection of the interior. Well, that's not very enticing to buyers. Most buyers don't want to write an offer on a home they can't see the inside of, right? So that's a case where a home can be on the market for a while, but it's not an OPT. It's just some circumstances that have caused the home to be on the market. So the first thing I do when looking at OPT, days on market. That's number one. Number two, how many times has it been relisted? Number three, how many price reductions has it had? And number four, is the property good? Like, are the photos good? Is it presented well? Can we see the property? These photos are pretty good. There's a couple areas that I'm gonna nitpick here. The first thing is the first photos of the property, the first four. Again, this is kind of like marketing 101. This is really important. This is your opportunity to catch the buyer. So if we go back to the listings, back to search, as you're scrolling on this page, what pictures pop to you, right? As a home buyer, what pictures pop? Like this pops. This picture, what the hell is, excuse my language, what the heck is this? What is this picture? This is the front photo of your house. This is how you're enticing people to buy your home with this photo. It's all freaking crooked. The house is cut off. You can't see anything. This is terrible. This is a complete disservice. So with the property in question, I'm going to go back to where we were at. If you look, like, this picture is nice, but it doesn't really jump off the page, right? Like, it's not grabbing your attention. Like, whoa, I want to click on that. Like, even this one here, like, whoa, this one kind of jumps off the page a little bit. Even this is a nice photo. Shows all the greenery in the house and, you know, stuff like that. Let's go through these photos really quick. It's a nice picture, but it's blah. These two pictures, this is mostly a picture of driveway. Like, it's fine. It's okay. This, whatever. This is mostly trees. This is getting better. Like, maybe this they use as the default. Maybe they use an interior shot. You know, so far the photos are okay. This is where we start to see the problem, okay? This is a professional photo. These are all professional photos. This is not a professional photo. This is not a professional photo. You can tell by the lighting. You can tell because the edges aren't straight. The angle is just not good. This is really super crooked. I mean, look at this line right here. This is not crooked. This is not straight, and this is not straight. I mean, it looks like the dining room set is on the sinking Titanic. This is not good. Will it make a difference in whether or not the home sells? No, probably not. But I'm just being critical. And if you're going to pay a real estate agent a lot of money to list and market your home, this is not the best thing to do. These photos are great. These photos look fine. Like, maybe use this photo as the default. Like, this kind of looks cozy. It's a little bit intriguing. Looks a little like old worldy, like vintagey. If you're someone that's like into vintage homes or older homes, character homes, this photo might resonate with you. You got the big fireplace and some nice beam ceilings. Like, this is the photo that potentially, if the exterior photo is not looking good, or you've got landscape that covers the house, use a different photo. Again, all these photos are good. This looks nice. So honestly, you know, their photos are okay. Kind of a small kitchen. You can tell just by the photos, the kitchen's kind of small. For 1.75 million, that's a tiny kitchen. You know, it's got kind of, you know, specific look to it. It's got like concrete counters that are green. Not everybody's going to like that. So when you look at this, you look at it, you go, this actually, you know, looks like a nice home. And I've been inside this home. It is a nice home. It's a good character home. It's been maintained really, really well. And it's got a lot of space. It's got a lot of good square footage, but it's not selling. If the home looks good, it's presented pretty well. I'm being very nitpicky on the photos. It's presented very well, but it's still not selling. That means that we've got a pricing problem. Hey, Maddie, are vintage character homes popular in Claremont? Yes, they are. Especially in the Claremont Village, which is the neighborhood this home is in. A lot of people that want vintage homes, the Claremont Village, that's what they love. And not only are the homes vintage, but the neighborhood is it's older. It's really walk friendly. It's got mature trees, mature landscape. It's a really quaint neighborhood, which is why there's always a lot of demand for the Claremont Village. There's very few turnover in houses, and when a house does come up, it sells very, very well. And it's really neat because it's a vintage neighborhood with character homes. They're all custom, so you could have a Cape Cod home, and then a craftsman style, and then a mid-century modern, and then a Spanish home, all like right next to each other. It's really, really cool. But yeah, vintage character homes are quite popular here in Claremont. And you have to know what you're looking for. You know, selling a vintage home is a little bit different than selling a brand new home. And there's some nuances that go into that. So if you are interested in looking for a vintage home, make sure your agent knows how to evaluate and compare and show vintage properties. Okay, so now what makes this an OPT? They have a cool bonus area. They got the great pool. They got all this stuff. Like even use this as your default shot. This looks cool. This grabs your attention, right? Like you've got the big pool, right? It looks great. You got the green plants. You can see that like the kind of the interesting steep roof line that kind of gives it that storybook feel. Like it just looks charming. It looks inviting. This is a much better front photo. This is the one that should be this should be the default photo. This will grab people's attention. Heck, even this one here is really nice. So the photos are good. The property's good. Why is this home not selling? It even has a guest unit, right? You can make some income off of it. Why is it not selling? Well, I'm going to show you why it's not selling. This home right here is, it is a little bit smaller. It's about 200 square foot smaller, so negligibly smaller. And it has one less bedroom. But one thing to remember is on our example home, the previous home, they were including the square footage and the bedroom in the guest quarters, and they added them up. This home does not have guest quarters, so it's a little bit different. But this home is around the corner from the previous home in the village, so the location's the same. The style is very similar, kind of like English storybook Tudor style. The square footage is extremely similar. The bed and bath count is extremely similar. This home was listed for $1 million. Let me see here. I got to remember. My company actually sold this home, and I almost had buyers that wanted to buy it. It was listed for sale for $1,550,000. It went pending not but 7 days later, and it sold for $1,572,000. This is how property should be priced. This is the way that things should go down if you have a good agent and a good firm that markets the property well, that knows how to negotiate, right? And knows how to price a property. Sometimes the sellers, they don't want to listen. You know, they push you away. They say, oh, I know what you think we should list for, but we don't want to list for that. And maybe that's what happened over here on our example home. Maybe these owners said, we don't care what you think, Mr. Agent. We want to price the home at what we want. Okay, well, that's fine. When it doesn't sell, they have nobody to be mad at but themselves. So let's go back to our other house here. So this property spent almost no days on the market. It spent about 7 days on the market as opposed to months of the other one. And it's because they priced it appropriately. They priced it properly. They got multiple offers, and the home actually sold for more than the ask price. And if you look at it, the photos are tremendous. They're excellent. Look at this photo. I mean, this pops right off the page. You have the cotton candy sky, the beautiful landscape lighting, the texture in the plants, the charming brick walkway that leads to the front door. You know, you have the architectural dual chimney. I mean, the house is just absolutely gorgeous. And this is, this front photo just pops right off the page. Again, another beautiful photo, a daytime photo. And again, great professional photos on the interior. I mean, look at this. You can see the character. It's staged very nicely. It's lit very nicely. It's just presented really, really well. And it's, it hasn't been like mega updated, mega remodeled, well, until we get to the kitchen. But again, it's sold really, really well. There was a ton of people at this open house, and it was all because of the pricing. So this is an example of what a not overpriced turkey is. Imagine this home selling for under 1.6, and the other home is still asking almost 1.8. Almost a $200,000 price difference for a home that's in the same neighborhood, the same style, almost the same square footage, and almost the same bed and bathroom count. Friends, that is how you know you have an overpriced turkey. That other home on Indian Hill is an OPT. It's a bona fide OPT. And when you price a home properly, when you price it correctly, when you present it well, like this home is, it's going to sell much better, much quicker, with much more interest. So this is an example of a non-OPT right here. And this one is an example of kind of a big fat gobbly OPT. So now we're going to move on to my my submitted properties from Miss Maddie. Let me open them up and put them over here. Now, I will say that I'm not as equipped to talk about OPTs in Maddie's area, which happens to be Woodland, California. So up north, kind of outside of Sacramento. I'm not as equipped to talk about them because I don't know the market. But Maddie is sharp, and Maddie hangs out a lot in the stream, and she knows what she's talking about when it comes to real estate. Maybe in a past life, she was a real estate agent. I don't know, Maddie, were you ever a real estate agent? Because if you weren't, you would have been a great one. She actually wrote up a little analysis for me. And so she helped me out a little bit. So this is 1401 Midway Drive in Woodland, California. It's priced at $1,240,000, 3 beds, 4 baths. It's a big house, 4,300 square feet. It's a big boy. And it's been on Zillow for 153 days. Oh, that's crazy. 153 in this market is insane. So why? Okay, let's see what Maddie says. Maddie says this house was listed on 5.9 for 1.25 million and slightly reduced to 1.24 million. So they shaved $10,000 off the price on 7/23. So it took them actually more than 2 months to do a price correction. It's on a busy corner. Gibson is a major east-west street. Let's take a look at the map. Oh, it is. Gibson is a big boy. Look, Gibson's big. So it is, yeah. And it's on a corner too. Some people don't like being on corners, corner lots. Sometimes you get some of your usable space gets chewed up. You don't get to use all the lot space. So yeah, it is on a busy street, definitely. Everything is classic mid-70s. Even the listing agent has tried to get the sellers, the heirs of the owners, to lower the price, and it just sits on the market probably at least $350K overpriced. Wow. That's crazy. So let's take a look at some photos. So, already, the very first thing that jumps out to me is, besides the day on market and all that stuff, what jumps out to me is this is a fake photo, right? Like this is like a dusky sky, but if you look, like the lighting doesn't match the dusky sky. The sun is going down over here, but we still have shadows over here. It's just strange. So this was a daytime photo that they manipulated the sky. Okay, whatever, not a big deal. Happens all the time in real estate where people will doctor photos. It's a fine looking house. The curb appeal is okay. They kind of got like this bark. I don't know if it's bark or if it's dead. I don't know if it's a dead lawn or if it's bark, whatever, but it's okay. I mean, it's a kind of appealing house. I kind of like the look of 60s and 70s homes. So, whatever, it's okay. The photos so far are very nice. No major objections. They're very clearly, these are professional photography. The 70s goodness is already coming through. Like, look at this freaking light fixture. That's precious. That is 1970s. If somebody maybe in like 1982 was like, we're going to update the entryway. We're going to put this light fixture in, but that is sweet. Oh, Max says, okay, it's bark chips. Okay. So it's not just dead grass. It's like mulch and bark. So at least it's something. That's good. It's better. Okay. So we have some photos here. It looks like they staged the property. So whenever you see stuff that looks like this, where it's like contemporary furniture and all looks very like neat and orderly, like this is staged. All this stuff was put here by a property stager, interior designer to try to make the home more appealing, which is good. This is actually a good thing. This is how you can avoid being an OPT, is by staging the property. Helps buyers visualize what the space can be, what it could look like. They can visualize themselves living there. So that's good. The agent is definitely trying. And it's funny because as I went through these pictures, I'm like, man, the property, it looks okay. The agent is making a genuine effort. Like, it's staged. Somebody had to pay for the staging. Somebody had to pay for the professional photography. The agent's trying. This is a classic example of the heirs, which is probably the sons and or daughters of the owners. The heirs just wanting this crazy price. They just want the crazy price, and they're not listening to their agent, which makes it difficult. What do you guys think about this house? What do you guys think about the 70s style? I think that's blue carpet. Wow. Mirrored walls. Like, what do you guys think about this? Would this be a house that you would consider? Just forget pricing for a moment. Just forget pricing, right? Is this the type of house that you would consider? Is this the type of house that you think needs a complete remodel, or would you just do the little stuff? What do you think? Okay. Yeah. So good photos. It looks nice. It looks pleasant. Ugh. Kitchens sell homes. And this kitchen is rough. It's got the tile countertops. It's got the super dark, like, yikes. This is like really, really dark. It's got wallpaper on the ceilings and wallpaper around the fluorescent lights. Yo, that's crazy. This is something that they should have fixed. So this is a piece of plywood, a plank that they very clearly put over this hole. My guess is that they probably had a different range at some point, and there might have been oh gosh, it's escaping me. The range hood was probably like right here at some point, and they removed it maybe, and they just put like a board over it, like at least paint it white and finish it. Like, you're trying to spend it. Oh, you're trying to get a lot of money for this house. So innovative. Yeah. Way too big. This is a big freaking house. This is ginormous, 4,300 square feet. Like, that's huge. It's a really big house. Even for me in California and in some of the mansions that we have, that's 4,300 is big. So kitchen, this is a tough sell right here. This can be a problem, especially for the price point. Yeah. Enjoy dusting for 3 hours a day. Yeah, you're exactly right. Or you're going to have to pay a housekeeper, which is going to increase your monthly costs and lower your affordability, right? So yeah, I hope you really need the 4,300 square feet. This home really is suitable for like a family of like 5 or 6 or 7 or something. Let's fly. Yeah. So again, reverse kitchen shot, linoleum floor. The house is clean, but it definitely is super 70s. This is kind of a cool room. You scrape the popcorn. You got the cool beams. Kind of got the cool rock. Kind of neat. But the photos are good. Yeah. Like, see, like this stuff needs to be fixed. Who's going to spend 1.2 million on a home that's obviously overpriced and like the wallpaper is chipping? Like, you got to be better than that. You got to be better than that. Especially if you're the agent, you're going to make a lot of money. You're working hard. It's got to be better than that. Okay. Hallway storage, big rooms. All right. I mean, this very clearly is an example of mom and dad's home, grandma and grandpa's home that was maintained, never super updated, never super upgraded. This is all original cabinetry, probably an original countertop. And they just maintained it. Whoa, this is like gold foil on the ceiling. This is wild. What is this? We got to get a closer look. Oh, I can't zoom in the photo. Dang. This is crazy. Like, that's wild. I don't know what, I've never seen that before. That's crazy. It has an office open to driveway. The original owner was a doctor. Oh, okay. Interesting. Well, this is a very doctor home, right? Like, it's really big. It's sprawling. That makes a lot of sense. Maddie, you totally should have been a real estate agent or a private investigator. You are good at researching this stuff, making my life easier. Thanks, Maddie. I'm gonna have to send you a Joe Precker real estate coffee mug. These light fixtures also crazy. This is wild. No wonder this isn't selling. So like, as you guys can see, like as we go through this, this is an OPT. This is a phenomenal example of an OPT. Michelle says the wallpaper is insanity. Yeah, it certainly is. It's got some green carpet down here. It's not the carpet of the closet, but it's just down there. It's crazy. Yeah, just whoa. Yeah, this is wild. This is Maddie. You found a good one, Maddie. Our inaugural OPT segment it's been a great success because of this one. This is crazy stuff. I mean, someone's gonna have to dump a bunch of money into this. Now, I can't tell you what I think this property. I can't tell you what I think this property is worth because I don't know the market. I would just be making something up. But I trust Maddie. Maddie knows what's going on. And Maddie says this is $350K overpriced. And I believe it. I believe it. Oh, cool backyard. Oh, I like that. Super private. Need to plant something here to block the neighbor's garage or whatever that is. Really cool backyard. Great pool. Yeah. Get your hands on this remodel. Yeah. Wouldn't this be a cool project? This could be a freaking awesome house. But it needs some help. It's near the hospital. A lot of custom homes built by doctors. Yeah, that makes sense. Makes a lot of sense. And obviously doctors built big homes. They got a lot of money. So spend it, right? So before we leave this one and go to the next one, the one thing I'm going to do is I'm going to go back to the search. And so we're right here. This is the home that we just looked at. I'm going to flip this from for sale to sold and hit apply. So that was at a little over 1.2 million, 1.24 million. As you can see, just in this neighborhood, again, we were on Gibson. It was Gibson by, it's one of these streets. I forget what it was. It was somewhere around here. There's not a whole lot of homes like 605, 595, 575, 925, 472, 425, 489, 569. Okay, here's one for 1.36 and here's one for 1.31. Let's take a look at this 1.31. Please have photos. Please have photos. Oh, dang, no photos. But here's an example of one that's very similar and it's at 1.3. Now we'll never know what the condition of this property is. So we can't really make a comparison because all we can judge on is based on this information and this one photo. So that doesn't really help us with that. But you can see that this neighborhood, is kind of having, it looks like to me, just based on the pins, this is like a 450 to like 700K neighborhood. And then when you price a property that expensive, it's really, really got to be special. It really needs to be special in order for it to do something. This is a great example of an OPT. This is a great example of an OPT. It's a good home. It's not a bad home. It's a very good home. It's just clearly way too expensive. And homes have sold for even more money than this, but with this condition and this location and this pricing, it's just not going. And the owners are going to have a tough time. And as it sits on the market, as it continues to sit on the market, it's not going to get any better. OPTs only get more stale with time. And the only way to correct that is really cutting the price. All right, Maddie, what other information you got for me? The 1.3 mil is on a larger lot, updated, and was lowered from 1.7 to 1.35. And I bet you this home's going to have a similar fate. See, 1.7, like, that's crazy. And when we just looked at the solds, Maddie, nothing was close to 1.7 in that neighborhood, at least that I saw, that actually sold. I don't care about what is for sale. I want to know what's sold because that's what's telling, that's direct feedback on what the market is doing. That's crazy. Lowered from 1.7 to 1.35, and it was on a larger lot, and lot size is an important factor. So, okay, let's go to our third and last one, also from Ms. Maddie. Pop this up here, move this over, share this tab. Bingo, we're rocking and rolling. Okay, so this is at 7511 Padden Road in Vacaville, California. This property I thought was kind of unique. It is a little rough around the edges. It's a ginormous lot, and it's kind of like got a farm feel to it. Kind of a neat property. So here it is at 910, 4-bed, 3-bath, and 2750 square foot on 2.29 acres. Hey, David, how's it going? We were just talking about Omaha. We were talking about Nebraska in the last segment. I wish you were here to sound off. We were talking about how homeowners insurance is like insanely expensive in Nebraska. What's that about? It's like the highest. It's even more expensive than Florida. Is it? Do you guys have that many tornadoes? Is it hail? Is it cows destroying houses? Like, what's going on? You got anything for me, David? Super expensive. Thanks for stopping by. Thanks for saying hi, David. There's rural, min size is over an acre. Yeah, okay, that makes sense. Okay, so let's dig into this. Beautiful Iron Gate opens up to 2.29 acre retreat. I love that word when they use like words like retreat. That's totally real estate. Like, oh, it's a retreat. 4 to 5 bedrooms with a conversion for a 5th. Okay, could be a studio, converted in-law suite. Okay, cool. 156 days on Zillow. Ooh, that's a lot. That's a lot. Let's take a look at the pricing history and see what they've done, what they did, where they're going. Oh my, look at all these price changes. Yeah, this is a classic nickel and dime them down. So it was listed for sale for 1.13 back on May 6th. And just about 3 weeks later, they dropped it 30K to 1.1. And about 3 weeks later, they dropped it another 50K. I mean, this right here, makes it grossly obvious that their agent either A, doesn't know what they're doing, doesn't know how to price a property, or B, the sellers are extremely thick-headed and stubborn. Usually, sellers that are stubborn and thick-headed won't have this many price reductions this quickly and by this amount. $50,000 price reductions, $30,000, $50,000, $50,000, $52,000 price reduction. That's a ton. That's a lot. Those are big reductions. Most sellers who are like hard-headed or stubborn, they're not going to want to reduce that quickly or by that much. To me, this is an agent that was shooting for the moon, or simply doesn't know what they're doing and doesn't know how to price a property. From 998 to 958, and now from 933 down to 910. This property has, and if I was representing a buyer, I would be telling my buyer to make an offer at 870. I would be telling them to lowball. There's obviously no interest. There's no demand for this property. They started way too high. This property is stale. It's a bona fide OPT. This might even be a better example of an OPT than the other ones because of the amount of price reductions that have occurred. So let's get into the photos. Okay, the first photos, it's all right. There's better other photos that we're gonna see. The first photo's only okay. Yeah, okay, so kind of dated here. It's got very clearly some laminate floors, pretty basic room. We've got like these small, like one foot by 1 foot tiles that kind of old. Very small fireplace on this very 70s rock wall. The kitchen is super small. Tile counters are always a killer. A dead giveaway that the kitchen's from the 80s at best. White tile countertops, could be early 90s, but yikes. This is a little bit more intriguing photo. Like when you see this, you're like, oh, okay, dang, okay, big, lots of driveway, lots of parking, lots of lot. Oh, does it even have a pond? It even has like a cool little pond. Oh, and it's got a detached garage. Oh, and it's got like a barn or shed or workshop, or a studio. Like that's really cool. Like this is the type of photo that probably is going to do better as a main default photo because it's intriguing. Quite honestly, their default photo here, like it looks like whatever. Like, it just is whatever. There's nothing intriguing about it. It's nothing special about it. People are going to go right past this. They're going to be unintrigued by the photo. They're going to be unenticed by the price. And this is how you get a recipe for a property that just freaking sits. This photo is even nice. This photo's good. It shows big lot and all this barn. That's kind of cool, especially if you got horses or something. Kind of a cool photo. Yeah, these photos are okay. These are professional photos. I can tell just by looking at them. And they're okay. It's okay. There was one photo in here that I didn't like that I would not include. Oh, another thing with this is like these photos are so out of order. It's hard for the consumer to get a good feel of the flow of the property when they're this out of order. If you look, it's like outside, like, is this the front of the house? Maybe it's the side of the house. We don't know. Reverse angle. Okay, so now we're inside and it opens up and there's a stairway right away. We're not sure. And then like, oh, but this is a different room. And where is this in relation to this room? And okay, now we got the kitchen, which has another type of flooring. Like, where is this? Okay, now we're back outside, but we're aerial now. We have an aerial bird's eye view. Okay, but now we're back down. And now we're out back. I think this is the patio. Now we're back out front. Like it's just all over the place. And again, it's not. These aren't things that are going to make or break the sale of a property. But again, as an agent, I have a duty to do the best that I can do for my sellers. As an agent, I'm going to make a lot of money from this. Let's not play games, right? I'm going to get a commission out of this if I sell this house. We need to do a lot better as the agent community. And again, this isn't going to prevent the house from selling, but it's the little things, right? All the little things add up. The photos aren't that great. They're not intriguing. The property's overpriced. The photos are out of order. You can't get a good sense of flow of the property. All of a sudden, buyers aren't coming. And it's for all these reasons. They all add up. And then you end up with a property that sits on the market. And you have a bona fide OPT. And the only way to correct an OPT, there's only two ways. Number one, you take the property off the market. You try again in 6 months or a year. Of course, you need to lower the price or improve the property. Number two, you don't take the property off the market and you just slash the price aggressively. And I don't mean like 5,000 here, 10,000 there. I mean like, no, aggressive price cuts as the only two things that you're gonna be able to do to get off that OPT designation. Innovative, it's got a lot of average to bury all. Okay, it's got a lot. You might have to rewrite this, innovative. Let me see if I can pull this out. It's got a lot of average to bury all the purchase price that you'll never see back in equity. Yes, there's a lot of average about the house, and the purchase price doesn't overcome that. And you're right, unless there's big development to this area, it is a really, really big lot, which can be good. But if this is a lot of acreage, okay, I got you. This is a rural area. It's not like there's going to be development opportunities where in 15 years, some developer is going to want to buy your lot for $3 million to build more homes. Like that's probably not going to happen here. So I agree with you. Maddie, what else you got for me? The floors are sloping, foundation issues. Maddie, have you been in this house? Did you go look at it? How do you know so much? Now I'm curious. You've intrigued me. I want to know, Maddie, how do you know about this? I'm impressed. Don't get me wrong. And that's a whole nother thing, right? Like if we have structural issues, let me take a look at this photo. Okay, this isn't a sign of structural. This might just be some paint damage or maybe termite or dry rot or something. But Maddie of course she's been in the house. How could I be so stupid? What else are you doing with your time? Okay, that's cool. I'm glad you're able to see the inside of it. Good insight. Were you just curious about the house or like, are you a prospective buyer and you're looking? I think if I remember, you recently sold something or are going to sell something, but maybe I have you confused. But interesting, very interesting. Yeah, huge lot. Dang, that is a huge lot to take care of. And this is interesting. So what I'm noticing now, again, now we're back inside. Like these photos need to be put in order. Like this is terrible. The order of these photos is really, really freaking bugging me. And it's just very classic 60s, 70s, this house. Again, another type of flooring. Yeah, just very awkward. Yeah, very dated. They're going to have a hard time with this one. They're going to have a very hard time with this one. And this is also why it's really important to make periodic updates to your home, because then you get in this position where, you haven't updated, you haven't remodeled, you haven't fixed this hanging drawer, you haven't fixed this, you haven't updated anything. And then when the time comes around where you do need to sell, it's going to bite you in the tushy. You're better off, investing that money as you get it, if and when you can. Do a little bit here, update a little bit here. You don't have to go crazy. You don't have to go, wild, but, just update the flooring, update the paint, maintain the house, make sure it's in good condition. Because then when you do go to sell, you're not going to get objections from buyers about the condition or the lack of updates and upgrades. So a couple things I want to bring to your attention that I'm seeing in these photos that I would exclude. This is a great example. This last photo, it's a good thing they buried it. You go, wow, this is really kind of neat, right? Like you can see there's not really anyone next to me. It looks like it's just vacant land next to me. Or maybe there's a house over here but this is, going to be a quiet neighbor. You have the cool pond. I love the pond. I don't know why I'm so intrigued by the freaking pond. Like, I don't know what I would do with it. I don't know. Maybe I'd go fishing. I don't know. Get a little remote controlled boat and putt around. I don't know what I'd do, but it's just so cool. But here's the problem. Look at all this next door. Like, what the heck is going on? This, I would be a little bit hesitant to live next to. Looks like they got a bunch of old cars, and I'm a car guy. I'm an old car guy. I love old cars, but like, what is going on? Are you like running a business out of this? Like, this is very, very interesting. And, it depends on what the privacy looks like and what you can see and what you can't see, but I would just be like a little bit nervous from that. All right, Maddie's got a lot more for me. Inside, first floor, realtor said heirs won't pay for inspection to diagnose. Oh God, they overpriced the property and they're cheap. That is a bad combination. The lighting in the photos is way better than in reality. Yep, another classic real estate trick. Photos looking better than the property itself. And the seasonal pond. Interesting. So I'm assuming like in the summer it dries up, and then probably in like the fall it's probably not too active. But then I'd imagine in the winter and spring it's probably there. That's interesting. That's really, really cool. But yeah, this is a bona fide OPT. So how to avoid being an OPT? Number one, take good photos. Put the photos in order. Have a lot of information about your listing. List all the upgrades. Give all the information that you can. But the very, very most important thing, price it in line with the comps. Your home's not special. And if it is special, people will pay more money for it, and it will naturally get bid up. Just price your home in line with the comps. When we talk about comps, let's go back to the search. Patton Road. Okay, where is Patton Road? I was hoping that it would just bring me right to it, but it won't. 975. Is this it? Is this our friend Patton? No, that's not it. It was like 912, right? It's so spread out. It's a little bit different. Let me go back and see if it'll highlight it. I just wanted to check comps really quick and see if we could find something that would lead me to the comps. Okay, where is it on the map? Here we go. Okay, just 505 by the river. Okay, so the 505. Where is it? Somewhere in here. Why am I missing it? I don't know. Somewhere in here. But we can look by the comps. Like we do have a couple homes that are 1.18. And so there's homes in that echelon, that range. I mean, obviously this is freaking beautiful. This is a gorgeous home with this is insane. It's freaking awesome. It's like a tree farm. That's got to be a tree farm. All those freaking trees. Wow, that's cool. Oh my gosh, that is so cool. This is the type of home that I want. I like workshops. I like big garages. I like all that space. But anyway, you can see that the comps, like they can get into that really expensive, $1 million price point. But for the most part, it's scattered all over the place. And yeah, it's just very clearly they're on the higher end. And when you look at, let's take a look at this one that's 1.18 for comparison. It's only a little bit more expensive. It's not like crazy more expensive. It's, about 180,000 more, but it's got solar, it's got the pool. I mean, very clearly, like this is a significant, and it looks like the lot's even bigger. I don't know where the lot size is. Where's the lot? The other one was like 2 point something. Oh, this is 5 acres. Heck yeah. So this is 5 acres. The property looks like it's in much better condition. It's got the pool that looks beautiful. It's got a much more substantial barn. It also has a seasonal pond, huge lot. Oh yeah. Okay. It's not like mega modern on the inside, but it's definitely contiguous flooring, a much bigger kitchen that's open to the family room. This has been updated. This is not original. Like this is much nicer. And yes, okay, I know this property is more expensive, and I understand that the one that we were looking at was, maybe didn't have this square footage or this lot size. But again, you can make all those changes. If this property is 1.175 and this one, let's see how many days, and this one's been on for 62 days. So this isn't quite an OPT yet because this is a really specialized property. Not a lot of people are looking for 5 acres. But if this is sitting at 62 days, this is a far superior property with a far bigger lot with what seems to be better amenities. And it too is sitting, and it's really not all that much more expensive than the previous one. So again, just this is very interesting, man. This area is very interesting to me. It's very intriguing seeing all these large lots and all these unique homes. In my area, it's just all like 3-2, 3-2, 4-3, 5-4, 4-3, 4-2, 3-2, 2-1, 1,800 square feet, 2,200 square feet. We get the same kind of cookie cutter stuff over and over and over. But so this is really intriguing to me. So super interesting. Every property is unique, but all on fair insurance. Okay, so the fair plan, which I'm glad you brought that up, Maddie. God, I'm gonna have to have you come on as a co-host with me. You're good. We were talking about insurance earlier, and fair insurance is the California kind of like state subsidized insurance, where it kind of it's the insurance policy that the state says, okay, if you can't get insurance, we'll give you the fire insurance. We're going to give you the insurance, but it's really expensive and it doesn't cover all that much. So, and I'm assuming that they're on the fair plan because it's kind of like a rural grasslands area. As you can see where we're at, this is San Francisco, this is Sacramento. So we're kind of halfway between San Francisco and Sacramento. Kind of interesting area. Very interesting. And the fair plan is usually looked at as being a little bit of a negative because, like I said, it's expensive and the insurance isn't all that great. So those are OPTs. That's what an overpriced turkey is. And you want to avoid that when you are pricing your property or thinking about selling it or thinking about buying a property. It doesn't matter. You want to keep a lookout for those OPTs. Sometimes the OPTs can be opportunities if you're a buyer, but you just have to know what the actual real value is. And hey, don't be afraid to make an offer. Don't be afraid to lowball, especially on some of those OPTs that are insane. The other moral of the story of the stream is be aware of that property insurance, right? If you're looking to buy, if you're looking to sell, Make sure that your property insurance is squared away, especially if you're looking to buy. Take those fees into account, because between property insurance and property tax, you could find your monthly mortgage going up. And maybe I'll do another stream on property tax. That's another thing that's kind of hot in the news right now. Guys, thank you so much for hanging out, spending your Wednesday evening with me. This has been another phenomenal stream. I'd like to give a special shout out to Maddie. She was excellent. She provided me with a ton of content for this stream. And we're going to be doing the OPT segment again. I don't think we're going to do it next week, but we're definitely going to do it at least once a month, if not 2 times a month. So we'll be doing this again soon. So if you come across any interesting properties, anything that's super unique, anything that's way too expensive, send it to me in my email. There'll be a link in the pinned comment down below. If you like the stream, please hit the like button, thumbs up, consider subscribing. It really helps me out. And like I said, it's free. I hope you guys all have a wonderful rest of your week. If you're watching in Florida, either live or on the replay, we're praying for you. We're thinking about you. Hopefully things don't get too destroyed out there. Have a good rest of your week, and I will see all of you guys next Wednesday. Have a good evening.